Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index remains under pressure this week, continuing a choppy downward trend. It opened around the 98.3 level as markets stayed cautious ahead of the Federal Reserve's rate decision. Following the expected rate cut, selling intensified after Chair Powell's remarks and the policy statement were interpreted as less hawkish than anticipated. The dollar has now fallen roughly 7% from its January peak. WTI crude slipped to around $56.6 on Monday. Global supply remains ample, with inventories continuing to rise across the US, Brazil, and Guyana. Production growth is expected to outpace demand through at least 2026, keeping physical markets well supplied. On the demand side, weak signals from China have heightened concerns that demand growth may not absorb excess supply. Progress in Ukraine peace talks has also pressured prices, as any credible ceasefire could reduce the risk premium tied to potential Russian supply disruptions. Spot gold traded near $4,308. Recent shooting incidents in both the US and Australia, combined with rising geopolitical uncertainty ahead of the Christmas holiday period and expectations that President Trump may push for a Ukraine peace deal before year end, have supported safe haven demand. While the Federal Reserve has signaled caution on further rate cuts until more data becomes available, investors are still pricing in 2 cuts next year, which continues to underpin gold. As a traditional safe haven asset, gold remains well supported amid elevated global uncertainty. The yen strengthened to around 155.3, reversing losses from the previous session as investors positioned ahead of this week's Bank of Japan policy meeting. Markets widely expect the BOJ to raise its policy rate by 25 basis points to 0.75%. Attention will focus on Governor Kazuo Ueda's post-meeting comments for guidance on next year's policy path, with analysts projecting rates could reach 1% by July. Expectations of tighter policy are supported by solid domestic data, including consumer inflation remaining above historical norms. Euro started the week flat, holding near its highest levels since early October. After the Fed delivered its third rate cut of the year last week, policymakers signaled a pause in further easing. On the other hand, the European Central Bank has effectively ended its rate cut cycle, which should provide fresh support for the euro against the dollar.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.